Hello, my name's Dominic Frisby, and today in Stuff That Interests Me, I want to talk about the pound, the Great British Pound. Now, obviously, it's fallen by rather a lot since the Brexit vote, but I think we're going to look back at late 2016, early 2017 as one of the great forex opportunities. Now, I say that humbly, and I say it tentatively, and I say it with the caveat that I've got a great many calls over the years wrong. This could be yet another. Now, the price of the pound versus the US dollar in the late 19th century, it used to be transmitted from London to New York and back again via transatlantic cable, the first transatlantic cable. And so forex traders refer to the US dollar against the pound as cable. And cable, a little bit of trivia for you to take away from this show, if nothing else. Now, cable currently stands at $1.22. And I would say that fair value is 15% higher than that, 20% higher than that on a purchasing power parity basis. That's the terminology. A purchasing power parity basis, I'd say that fair value is, I don't know, $1.40, $1.50, something like that. But the price is what the market says the price is. It's not what Dominic Frisby thinks is fair value. And what has me excited about the prospects for the pound is not just the fact that it's cheap, it is something else altogether. Now, it's easy to look back at history, find some arbitrary pattern and declare there's a cycle. When people start talking about cycles, hocus pocus abounds. However, far too long spent looking at a long-term chart of cable has led me to believe that there is an 8-year cycle. And this is something that goes back many years, and I think I was the first person to write about this. So I've dubbed this cycle, the 8-year cycle in the pound, I've dubbed it Frisby's Flux. Now here's a long-term chart of sterling that goes all the way back to 1970. And you can see in 2016, of course, we had that large, well-publicised sell-off in the pound sparked by the Brexit vote. And overall, from its highs 2 years earlier to its low on the morning of the flash crash last October, the pound lost about 30% of its value. And go back 8 years to the financial crisis of 2008, and we got an even bigger sell-off. The pound touched $2.10 in late 2007, and it then sold off 35%, slipping all the way down here. In fact, on an intraday basis, it actually went below $1.40 by the end of 2008. And then if you go back another 8 years to the turn of the century, and the pound saw another major sell-off to accompany the dot-com crash. And this one was around 20%, not quite as big. Another 8 years before that takes us to 1992 and Black Wednesday, that notorious day when George Soros and others shorted the pound and stories say almost broke the Bank of England. The UK was forced to drop out of the European exchange rate mechanism. What a blessing that turned out to be. And the overall falls were something like 30%, similar to now. Another 8 years before that takes us to 1984. And you can see at the very end of 1984, the beginning of 1985, the pound went, again, on an intraday basis, it actually went to $1.04. This was the biggest sell-off of the lot. It went from a high of $2.40 in 1981 to an all-time low of $1.04. And the UK had the Falklands War, followed by the miners' strike, while in the US, in Reagan's first term, the US dollar was extraordinarily strong. So strong that the governments of France, West Germany, Japan, the US and the UK, the so-called G5, actually had to agree the Plaza Accord in 1985 to depreciate the US dollar. But overall, from high to low, the loss in the pound from 1981 to 1984 was 55%. Go back another 8 years to 1976 and you'll find another cycle low. The drop then was almost 40%, from $2.60 in the beginning of the decade all the way to $1.60. And another 8 years prior to that, there was another sell-off ending in 1968, although really prior to 1971, with the USA still on the gold standard and the post-World War II Bretton Woods Agreement still applying, currency fluctuations were different. So analysis should only really start after Nixon closed the gold window in 1971. And you can see that after every one of these lows, the pound enjoyed a considerable rally, which went on for many years. The least strong of all the rallies was this one here. But it's my theory that the pound saw just such an 8-year cycle low with the flash crash last October, and over the next few years it's set to appreciate once again. Now obviously the process of leaving the European Union, it's not going to be smooth, so the forex markets are going to be bumpy as a result, but my forecast is that the overall trend is going to be up, and that sometime, I don't know, next year, the year after that, we'll get back to fair value and we'll see $1.40, $1.50. Who knows, perhaps we might even exceed that levels. Markets have a tendency to overshoot. And come 2022, let's say, you should be getting ready to short the pound once again. That is to bet on it to fall in anticipation of another 8-year cycle low in 2024. So there you go, that's your fortune made over the next few years. And if you don't all become Forex millionaires, you've only yourselves to blame. Once again, I remind you that this is an expression of opinion only. It is not intended as financial advice. Oh yeah, and what I forgot to say is please subscribe to my YouTube channel. I'll try and upload 1 or 2 of these a week, but it won't be done on a regular basis, like, every Friday evening or something like that. So the best way to be notified each time I upload a new video is to subscribe to my YouTube channel. Thank you.